Imagine getting sick and ending up with a hospital bill that costs more than your car, your savings, and maybe even your house combined. Scary thought, right? Here's the real problem. Most people in the USA don't fully understand how medical insurance works. They either pick a plan that's too expensive or they pick one that leaves them exposed when they need it most. The big question is, which medical insurance plan is actually best for you? By the end of this video, you'll know how to figure that out with confidence. Number 1. Why medical insurance matters. Medical insurance is not just another bill you pay every month. It's financial protection against unexpected costs that could wipe you out. Without it, a broken leg can cost over $7,000, and an overnight hospital stay can be $10,000 or more. One major surgery can run into hundreds of thousands. In fact, medical debt is one of the leading reasons Americans file for bankruptcy. Insurance is designed to prevent that nightmare. Number 2. Understanding the basics. Medical insurance works like this. You pay a monthly premium, which is like your membership fee. When you go to the doctor, you might pay a copay, which is a small set amount. If something big happens, like surgery, you'll share the costs until you hit your deductible. Once that's met, the insurance company starts paying most of the bill, and you're left with coinsurance until you hit your out-of-pocket maximum. After that, the insurance covers everything. Think of it like a safety net with a floor. Example: if your plan has a $2,000 deductible, 20% coinsurance, and a $6,000 out-of-pocket maximum, the worst-case scenario in a year is $6,000, no matter how high the bills get. Number 3. The main types of plans. There are a few main types of medical insurance plans in the USA. HMO, or Health Maintenance Organization, is usually cheaper but more restrictive. You must choose doctors within a network and often need referrals. PPO, or Preferred Provider Organization, is more flexible. You can see specialists without referrals and go out of network, but premiums are higher. EPO, or Exclusive Provider Organization, is like a middle ground. Lower cost than PPO, but you have to stay in network unless it's an emergency. HDHP, or High Deductible Health Plan, comes with lower monthly premiums but higher deductibles. These pair with HSAs, health savings accounts, which let you set aside money tax-free for medical expenses. Example: an HMO might be great for someone who doesn't mind sticking with one doctor and wants lower costs. A PPO may be better for someone who travels often or wants more freedom to choose specialists. Number 4. Premiums versus deductibles, the trade-off. Here's the classic question. Should you pay more each month for a lower deductible, or save money on premiums but risk paying more if you get sick? Think of it like car insurance. A plan with a $500 deductible and a $400 monthly premium may look safer. But if you're young, healthy, and rarely go to the doctor, a $200 monthly premium with a $5,000 deductible might save you money in the long run. Example: if you spend about $500 a year on doctor visits, choosing the lower premium plan could save you thousands annually. Number 5. The hidden costs you might miss. Many beginners only look at the premium, but ignore other costs like copays, coinsurance, and the out-of-pocket maximum. These numbers can make or break your budget. Example: Plan A costs $350 a month with a $20 copay. Plan B costs $300 a month, but has a $50 copay. If you see the doctor often, Plan A might save you money even though it's more expensive upfront. Number 6. Employer plans versus marketplace plans. If your employer offers coverage, that's usually the best deal because they often pay part of the premium. But not all jobs provide insurance, and some people choose marketplace plans on healthcare.gov. Employer plans are generally cheaper, but marketplace plans can offer subsidies if your income is low to moderate. Example: if you make $40,000 a year, you might qualify for reduced premiums on the marketplace. Someone making $100,000 may not get a subsidy and could find employer coverage cheaper. Number 7. Family plans versus individual plans. If you're single, an individual plan may work. But if you have a spouse or kids, family plans come into play. They cover everyone under one policy, but have higher deductibles and out-of-pocket maximums. Example: a family of 4 might have a family deductible of $6,000. This means once the family as a whole pays $6,000, the insurance starts covering more, even if one person hit only part of that. Number 8. Medicaid and Medicare. For people with lower incomes, Medicaid is available. It provides free or low-cost health insurance. Medicare is for people 65 and older or those with certain disabilities. Example: a single adult earning less than around $20,000 in many states may qualify for Medicaid. A 70-year-old retiree will use Medicare. Understanding where you fit can save you from overpaying for a plan you don't need. Number 9. HSAs and FSAs, the tax advantage. Some plans let you use HSAs or FSAs to pay for medical expenses with tax-free money. An HSA is tied to high-deductible plans, but the money rolls over year to year. An FSA is available through employers but has a use it or lose it rule. Example: if you put $2,000 into an HSA, you avoid paying taxes on that money, and you can spend it on medical bills, prescriptions, or even eyeglasses. Number 10. How to compare plans. When looking at options, don't just look at the premium. Compare 4 things: the monthly premium, the deductible, the out-of-pocket maximum, and the provider network. Make a chart and plug in your numbers. Ask yourself, how often do I see the doctor? Do I take regular medications? Do I have a preferred hospital or specialist? Example: someone with diabetes who sees a doctor monthly and buys medication should prioritize lower copays and prescriptions. A healthy 25-year-old may want the cheapest premium possible. Number 11. Common mistakes to avoid. Mistake number 1. Choosing the cheapest plan without checking coverage. You might save money monthly, but pay thousands later. Mistake number 2. Ignoring out-of-network costs. Some plans won't cover a dime if you step outside the network. Mistake number 3. Forgetting to check if your preferred doctor is covered. Example: imagine paying for a PPO plan but realizing your doctor isn't in-network. Suddenly, your costs double. Number 12. Special cases and life changes. Your best plan can change depending on your life stage. If you're young and single, you might pick a high-deductible plan. If you're starting a family, you'll want lower out-of-pocket costs. If you're close to retirement, planning around Medicare is key. Example: a couple expecting a baby might need a plan with strong maternity coverage. A retiree will need to check how Medicare and supplemental insurance fit together. Number 13. What happens if you skip insurance? Skipping insurance might feel like saving money, but it's a huge risk. One car accident or sudden illness could leave you with medical bills equal to years of income. Example: a friend of mine skipped insurance at 22 because he was healthy. A surprise appendectomy cost him $28,000. It took him nearly a decade to pay it off. Number 14. How to actually choose the best plan. Step 1. Write down your medical needs. Do you have prescriptions, specialists, or chronic conditions? Step 2. Set your budget. What can you comfortably afford each month, and what could you handle in an emergency? Step 3. Compare real numbers: premium, deductible, out-of-pocket maximum, and copays. Step 4. Think about flexibility. Do you need access to many providers, or are you okay with a network? When you put these together, you'll see which plan balances cost and protection best for you. Number 15. Prescription drug coverage. Many people forget to check how their plan covers medications. Some plans have a separate deductible just for prescriptions, while others include them in the main deductible. Example: if you take blood pressure medication every month, a plan with strong prescription coverage could save you hundreds of dollars a year compared to one that offers minimal coverage. Number 16. Mental health and wellness benefits. Modern insurance plans often include coverage for mental health care, therapy sessions, and even wellness programs. This can be just as important as physical health coverage. Example: if you see a therapist weekly at $120 per visit, having insurance that covers mental health with just a $20 copay can make a huge financial difference. Number 17. Emergency and urgent care rules. Plans treat emergencies differently than urgent care. Emergency room visits are often covered, but come with higher copays. Urgent care centers may be cheaper, but only covered if in-network. Example: a trip to the ER for a sprained ankle might cost $1,000 with your plan, but using an in-network urgent care clinic could cost just $100. Number 18. Telehealth options. Telehealth has become a game changer. Many plans now cover virtual doctor visits at a lower cost than in-person visits. Example: instead of paying $150 for an office visit, a telehealth appointment might cost $30 and save you hours of time. Number 19. Preventive care coverage. Under current law, many preventive services are covered at no extra cost. This includes vaccines, annual checkups, and screenings like mammograms or cholesterol tests. Example: getting a flu shot for free through your plan may not sound like much, but preventing an illness that could keep you out of work for a week is invaluable. Number 20. Network size and hospital access. Not all insurance networks are equal. Some only cover a few local hospitals, while others give you access to large hospital systems nationwide. Example: if you live in a rural area, choosing a plan with a larger network ensures you won't have to drive hours just to find an in-network hospital. Number 21. Specialist referrals. Some plans require you to see a primary care doctor first before you can visit a specialist, while others let you book directly. Example: with one plan, you might need a referral before seeing a dermatologist, which delays care. With another plan, you can go straight to the dermatologist without the extra step. Number 22. Out-of-network protection. Even if you mostly stay in-network, it's smart to check how your plan handles out-of-network care. Some plans don't cover it at all, while others cover a smaller percentage. Example: if you travel often and suddenly need medical care out of state, having a plan with some out-of-network coverage could save you thousands. Number 23. Additional perks and extras. Some plans include perks like discounts on gym memberships, free nutrition counseling, or even rewards for completing wellness activities. Example: completing a yearly health survey with your insurer might earn you a $100 gift card or a lower premium. Picture this. You're at a crossroads. One path leads to overspending every month for coverage you don't use. The other leads to cheap insurance that collapses the moment you need it. But there's a middle road, and now you know how to find it. Medical insurance isn't one size fits all. The best plan depends on your age, health, family situation, and budget. But by focusing on the right numbers and avoiding the traps, you'll protect yourself and your wallet. So what about you? When it comes to choosing a medical insurance plan, what's the single biggest factor you care about most?